Market action is kind of weird this morning. We have lots and lots of economic reports, and they are mixed, although trending towards pretty positive. Some of those, however, could point to a situation in at least the immediate future where people would be less likely to purchase an automobile, and that could be impacting Tesla this morning, which is not doing quite as well as other stocks. On the other side of the coin, or maybe this isn't the other side of the coin, maybe it's just a different story. Putin and Trump are meeting, so that could impact stocks today, tomorrow, Monday. Anyway, but that's definitely also out there right now. The rotation seems to be continuing from tech to industrials. Although, as I reported last night, at least one pundit and Bradford Ferguson agree that the top tech names are not overpriced, but the rest of the S&P might be. In fact, the 493 stocks that don't include the top seven are trading at 22 times earnings, and that could be overpriced. And if true, then we would probably get the pullback, a consolidation, 5 to 10% that I've been thinking might happen. Now, of course, I believe that the economy is going to do well in the fourth quarter and then go crazy in the first quarter. That would be certainly indicated by the fact that the markets are at all-time highs right now, but a pullback wouldn't say that the economy is not going to do well. It just would say that the stocks have gone too far, too fast, and it's time for a breather. Well, okay, as mentioned, there's tons of reporting this morning, and then after the tons of reporting, I do have this kind of funny thing about Art Laffer that came out of the Larry Goldberg interview, so stick around for that one. Tesla Roddy says this morning, and this is pretty funny too, if there's any sign that Tesla is now super confident about its self-driving program, it would be this. As could be seen on Tesla's career page, the company is now hiring autopilot vehicle operators. Well, we know that. Well, they just hired them in New York City. This is Randy now, not Tesla Roddy. They just hired them for New York City. I don't drive in New York City. If I go to New York City, I take cabs the entire time. But so they've hired in New York City, so that would show confidence. No, they've just hired autopilot vehicle operators for Delhi and Mumbai, India. As far as real-world traffic is concerned, one could argue that India's city streets are the final boss of autonomous driving systems due to their complexity and their congestion and all the pedestrians and all the bicycles and I'm adding all those things to the story. And of course, motorcycles of all kinds and stripes, mostly mopeds. As per Tesla, in its recent job openings, prototype vehicle operators will be responsible for driving and engineering vehicle for extended periods and conducting dynamic audio and camera data collection for testing and training purposes. In both jobs listings for Mumbai and Delhi, Tesla noted that successful applicants will be gathering real-world data on the weekends and around the clock. Considering the job openings in India, Tesla seems to be intent on rolling out its advanced driver assist programs like FSD in that country. This is quite interesting, as Tesla is not hiring prototype vehicle operators in other territories that recently launched, such as the Philippines. Perhaps Tesla intends to tackle FSD's final boss of a sorts before rolling out FSD in other places. In India's chaotic traffic, the ultimate boss battle for full self-driving seems to be taking place. Well, Elon Musk has also recently announced on X that Tesla will be releasing FSD version 14 in the coming weeks. He also shared a number of improvements that can be expected from FSD 14. The FSD release in about 6 weeks will be a dramatic gain, as we've talked about for days now, with 10x higher parameter count and many other improvements. It is all the way through training and testing now, and Elon says that once we confirm real-world safety on FSD 14, which we think will be amazing, the car will nag much less, Musk wrote in a post, according to this article. Joe Hansen is under the handle of Joe Hansen 𝐄𝐦𝐚𝐲 XX. Okay, 𝐄𝐦𝐚𝐲 XX. He says, victory. After 600 days, the union Mafia IF Metall gives up its strike against Tesla over collective agreements in Sweden. Now other solutions are being offered, allowing alternatives. Another alternative is that Tesla writes employment contracts that ensure the demands that the union has, said IF Metall. Ironically, Tesla has had equivalent or even better agreements than they are demanding since day one. A big fat waste of time. But think of the damage the union has done to Tesla, with hundreds of companies unable to buy Tesla company cars, and how they've hindered Sweden's green vehicle transition and the expansion of the charging network. So this should be a positive this morning and should be impacting the stock in a positive way. AJ says this, XPeng and the Volkswagen Group have announced entry into an agreement on expanding EE architectural technological collaboration. EE architectural collaboration is expanded by Volkswagen's ICE and PHEV platforms in China beyond EVs after July 2024 master agreement and key milestones. Number 2, expansion broadens the partnership for cross-platform powertrain use. Number 3, the goal of the adaptable architecture is to enable faster software and over-the-air updates and shorter development cycles. Number 4, the company's highlighted collaboration. Increasing equipped vehicles in China delivers economies of scale, better competitiveness, cost reductions, and enhanced customer options for Volkswagen. CEOs from both companies highlighted the milestones. XPeng's Xiaopeng emphasized mutual trust and innovation. So Volkswagen, once again, having to go outside of its company to find help with its software rather than coming to Tesla. This has not worked out well for them in the past, and I doubt whether it's going to work out that well this time. Some people, including me, thought it might have been Xiaopeng as opposed to XPeng, and that would have been more worrisome than XPeng. Business Insider must really be hurting for clicks. This is August. It's the worst month of the year for news, but Business Insider, no lover of Tesla, has running a hit piece that they already ran back in May, in August. This is Randy Kirk. Please hit like, please hit subscribe, please hit notify. Why? Well, because later on today, we won't have Larry Goldberg. He's got a bots missing going on today, so he won't be helping out, but it'll be Brian Wang. And then after that, Phil Beisel tonight. And then I'm thinking both of them might be back over the weekend, along with who knows what else. But I've got lots and lots of things in mind for this weekend. So that's why you hit notify. And in order to hit notify, you have to be subscribed. And if you really want to help out the channel, then you will help out by hitting me up with some cash. CNBC says this morning, Wall Street veteran David Zervos added his name Thursday to the list of potential Federal Reserve chairs who think the central bank is past due in approving an interest rate reduction. The chief market strategist of Jefferies told CNBC that central bankers shouldn't be daunted by the July producer price index showing pipeline inflation pressures hotter than perceived, or expected rather. Shouldn't worry about that particular PPI report. That's what he's selling me. Instead, he advocated the Fed move aggressively now to ease as a way to forestall a labor market slowdown and, in fact, help create millions more jobs. For the past 3 Fed meetings, Zervos has advocated a 0.5 percentage point cut in the federal funds rate, and he repeated that position again. I'm still absolutely there. I think there is a reasonable storyline, a very cogent storyline that suggests monetary policy right now is too restrictive, he said. Generally speaking, I don't see any reason that the PPI number changes that view, he said. And he says, by the way, I agree with Randy Kirk on this. A process that has included just 3 or 4 names to succeed Fed Chair Jerome Powell when the term expires next year has expanded in recent days to nearly a double. 𝐒𝐚𝐲 joined a list that includes current and past Fed officials, at least one Trump administration advisor, and multiple other noted Wall Street occupants. Of the group, 𝐒𝐚𝐲 and BlackRock bond strategist Rick Ryder are the only ones whose background is more concentrated on the markets rather than more concentrated on economics. I think it would be, quote, I think it would be an incredible benefit to have more market savvy, more market competent people involved in the monetary policy decisions, 𝐒𝐚𝐲 said. Earlier in the day, economist Mark Summerlin, also on the list of finalists, backed a half-point cut as well and said the Fed has been too conservative in fighting the inflation battle. President Donald Trump has pushed hard for the Fed to cut, lashing out repeatedly at Powell and suggesting the Federal Open Market Committee should slash as much as 3 percentage points or 300 basis points. Yeah, quote, I don't know that I could get all the way to 300, but I could certainly get to 200. And I would be convinced on lower than that if you really push the AI story and the technology story and the idea that we have disinflationary pressures building from a supply side narrative, 𝐒𝐚𝐲 said. Whoa! Advanced estimates of the U.S. retail, news story. Advanced estimates of the U.S. retail and food services sales for July 2025 adjusted for seasonal variation and holiday and trading day differences, but not for price changes. Sheesh. We're $726.3 billion, up 0.5% from the previous month, and that's up 3.9% from July of 2024, 3.9%. Total sales for the May 25 through July 2025 period were also up 3.9%. And from the same period a year ago, the May 2025 to June 2025% changes were revised up 0.6% to 0.9%. Retail sales were up 0.7% from June and up 3.7% from last year. Non-store retailers were up 8% from last year. 8% from last year, while food service and drinking places were up 5.6%. Reuters said this. Bank of America Institute said an analysis of deposit data showed a widening in the wage gap between lower income and higher income households, an indication that the labor market appears to have deteriorated more significantly for lower income workers. That seems the opposite of what I'm kind of expecting. It said while lower income households might not be losing their jobs, soft labor demand is pressuring their pay and they're potentially working fewer hours. Retail sales, excluding automobiles, gasoline, building materials, and food services, increased 0.5% last month and an upwardly revised 0.8% rise in June. These so-called core retail sales, which correspond most closely with the consumer spending component of gross domestic product, were previously reported to have gained 0.5%, so well up. I think they got it wrong. One of the two, no, actually, I'm going to go with the original number, 0.9, not 0.8. Well, but on the other hand, more good news rather, the Empire State Manufacturing Index business activity grew modestly in New York State in August, according to firms reporting in the New York area. The headline General Business Expenditures Index rose 6 points to 11.9, its highest reading in several months. There were new orders and shipments increased, delivery times lengthened significantly, and supply availability worsened. Employment edged slightly higher while the average work week held steady. Now, that doesn't sound anything like what we just heard from Bank of America. The pace of input price increases remained elevated, but was little change from last month. So not any real inflation. Capital spending plans were soft. Firms expect expenditures to improve in the months ahead, although optimism diminished compared to last month. Manufacturing activity in New York State picked up for a second consecutive month. According to the August survey, the General Business Conditions Index climbed 6 points to 11.9, its highest level since November of 2024. The New Orders Index rose 13 points to 15.4, and the Shipments Index held steady at 12.2. Well, normally I wouldn't be super interested in reporting the import price variations, but right now, it seems like the import price deal is, really, really important. So here we go. Import prices increased 0.4% in July, following a decrease of 0.1% in June and a decline of 0.4% in May. So we've got to turn around. Maybe we're starting to see a little bit of normalization after those decreases. Prices for U.S. imports decreased by 0.2% from July of 2024. So even with the increase this month of 0.4, they're still lower than they were a year ago. Tariffs, anybody? Fuel imports, prices for imported fuel advanced 2.7% in July, following an increase of 8.8% in June and a decrease of 5% in May. The July increase was the largest monthly advance since the index rose 3% in January 2025. Higher prices for imported petroleum and imported natural gas drove the July increase, even as the price of fuel and natural gas is down dramatically, as you'll see in a minute. So fuel import prices decreased 12.1% for the 12 months. So we have an increase for the month, but it's a dramatic decrease over the 12 months. The price index for petroleum imports decreased 13% over the past 12 months. Prices for imported natural gas increased 62% over the same period. But wait till you see what the current situation is on natural gas, which is why you want these numbers to be much more immediate. All imports, excluding fuel, prices for non-fuel imports advanced only 0.3% in July, following a decrease of the same amount in June. Higher prices for non-fuel industrial supplies and materials, consumer goods, and capital goods more than offset the lower prices for automotive vehicles. Lower prices for automotive vehicles and foods, feeds, and beverages. Lower. Tariffs much? Non-fuel import prices increased 0.9% for the year ended July, 0.9 for the entire year, and have not declined on a year-over-year basis since the 6% decrease in February. Foods, fees, and services, et cetera, et cetera. Non-fuel, I think we can go over. I think finished goods, prices for the major finished goods import categories were mostly up in July. Import prices for consumer goods increased 0.4% in July. That's the largest one-month increase since February. Higher prices for apparel, footwear, and household goods contributed to the July advance. The price index for automotive vehicles decreased 0.2% in July, the largest monthly decline since the index dropped 0.2% in November. The July decrease was led by lower prices for passenger cars, new and used. Imported capital goods prices increased only 0.1% in July. I don't know what to say. People are saying, well, it's going to take a quarter before we're going to see these increases. Well, guess what? It's been a quarter. We're not seeing the increases. Barron says this, for producers, it may not be good news in the short term that the gas market isn't currently acting like the oil market, where companies turn off production and prices fall. Where companies turn off production and prices rise, it should say. Natural gas producers have been adding drilling and rigs since the beginning of the year because they expect an increase in liquefied natural gas for export, and new data centers will add to the demand in years to come. Barron's kind of got this completely wrong. Natural gas prices were crazy high earlier this year. That would certainly cause people to add more drilling, etc. They have come down a lot. And that may be because of a very, very mild winter in the fifth or even fourth largest economy in, did I say winter? Very mild summer in the fourth largest economy in the world, California, which would dramatically drop the amount of natural gas because we all run our air conditioners out here on natural gas. There is a difference between what's happening in terms of the near-term fundamental dynamics and what the longer-term thesis is, said RBC commodity strategist Chris Looney, Louney. In fact, he said natural gas should attract broader interest over the next 5 to 10 years because of the role that it's going to play in the AI data business. Industrial production and capacity utilization were edging down, but only 0.1% in July. Manufacturing output was unchanged after increasing 0.3% in June. In July, the index for mining declined 0.4%, and the index for utilities decreased 0.2%. At 100, the utilities going down, I'm telling you, that's California. At 104% of its 2017 average, total IP in July was 1.4% above its year earlier level. Capacity utilization moved down to 77.5. Now that's a little worrisome right there. There's something to pay attention to. The capacity utilization at 77.5% is not good. Consumer sentiment. Here we go. Now, remember again, the Consumer Sentiment Index comes out twice a month. It comes out at the halfway point in the month where they interview about 250 to 300 people. 250 to 300. That's right. That's the total. That's all. 250 to 300 people. And they come to all these conclusions. And then that's their initial consumer sentiment survey. And then they come back at the end of the month and they interview another 250 to 300 people and they come up with their final conclusion. And it's a weak survey. And people pay a lot of attention to it. Consumer sentiment fell back 5% in August. 5%. Declining for the first time in 4 months. This deterioration largely stems from the rising worries about inflation. Buying conditions for durables plunged 14%, its lowest reading in a year on the basis of high prices. What high prices? There's just no high prices. Current personal finances declined modestly amid growing concerns about purchasing power. Because why? Because the press is full of stories about purchasing power. In contrast, expected personal finances inched up a tad with a slight firming in income expectations, but it remains subdued. Overall, consumers are no longer bracing for the worst case scenario for the economy feared in April. However, consumers continue to suspect both inflation and unemployment to deteriorate in the future. Year-ahead inflation expectations rose from 4.5% last month to 4.9% this month, and this increase came across multiple demographic groups and for all three political affiliations. Can you imagine? You've got 250 to 300 people, and you're now breaking down your statistically significant numbers into subgroups. Did anybody take stats? Long-run inflation expectations also lifted from 1.4% in July to 3.9%. I'm sorry, that's 3.4 to 3.9 in August. This month ended 2 consecutive months of receding inflation considerations. Still, both readings remain well below the highs seen briefly earlier this year. All right, so we've got we've got Truflation. Saying that the overnight is a little higher at 207, but now the year over year is all the way down to 2.01. Their PCE number is at 2.61. So I'm sorry, consumers, any inflation you think you're seeing isn't showing up. It's not showing up in import prices. It's not showing up in the New York survey. It's not showing up. Its only place it's showing up is in the PPI, and those numbers were horrible, as I discussed yesterday, because 2 categories were nutty, completely off kilter, and they threw everything else off kilter. And that's why the markets didn't respond to that yesterday. Trump, by the way, is back up to 49% this morning in terms of the number of people who think he's doing a good job. Tesla is down almost a full percent, 0.89% this morning, and that's where it's been for the last about 40 minutes. The Dow Jones is barely up, but it's up 0.1. The NASDAQ, however, is down 0.24. See that we've been seeing this rotation. S&P down 0.2. Apple is a little bit down, as is Microsoft and NVIDIA, and the other 3 of the Magnificent 7 are up. The VIX this morning is under 15. Wow, but it is popping up. It was even more under 15 earlier this morning, like 14.5. Now it's at 14.79. We've got the Cathie Woods mostly up, even though I think we'll find that the bonds yields are also moving up. All right, let's go ahead and look at the bond yields. And what we've got there is, yes, we're up, but only 0.4. There you go. That's not too bad. 4.297. It was worse earlier this morning. We have got oil falling again, down 0.41 cents. I'm sorry, 41 cents to 63.55. You got natural gas up 4% this morning, but it's still under $3 at $2.95.5. Now, by the way, I did a lot of analysis there. Natural gas can actually fall below 2. It can fall down to like $1.75 and has been $1.75 a couple times within the last year. So $2.95 is actually not bad. So it's not shocking that they're still putting in more natural gas rigging and trying to get more out of the ground. All right, we've got gold sitting at $3.10 up today, 33.86. Silver down a little bit, 0.5% at 37.88, and copper up a little bit at up 0.38 at $4.50. You got the dollar slipping a little bit. You've got Bitcoin slipping a little bit more, down 429. It was up earlier this morning. It's at 117,811. And that is all of the reporting. Now, later today, I already mentioned, you'll have Brian Wang for sure as the 5 o'clock or 4 o'clock, somewhere around there, report. And then it'll be Phil Beisel. Last night, we had CERN Basher on again after Bradford Ferguson. I will put both of those up. Both of those are extremely well worth a look if you didn't check them out last night. I know this is August. The numbers are down. I know you're on vacation. Sneak away to listen to what Brad Ferguson had to say. You really, really want to see. I got both cards right there. All right. What did I learn from the Larry Goldberg interview with Art Laffer? Well, he's not 85 years old. I want to look as good and feel as good and be as energetic at 85 as he is. That is my new goal. But what I really learned is that how many people have had a theory that they've been fighting for their entire career and have had that theory actually get a name called the Laffer curve, and his entire idea of economic governance is kind of, there's a Laffer approach. He's got 5 pieces to that. You'll have to look back, because if you want to really understand the 5 parts to his 5-legged stool, you'd have to listen to Larry's interview. But Art Laffer has all 5 of those legs happening right now with the current president of the United States. President Trump has basically agreed with Art Laffer pretty much across the board. Art Laffer loves the big, beautiful bill. Art Laffer loves what's happening on tariffs. Art Laffer explains why, even though tariffs sometimes can be horrible, for what Trump is doing, they're fine. So I thought that was extremely interesting that somebody at 85 get the highest levels is going to get to see whether the theory of their life actually pans out in the economy. And he's probably going to live long enough to figure that out, because I think we're all going to see it in the next 9 to 12 months. It's going to be an exciting year, and I'm sure that you'll enjoy hanging in there with me as I report on it over the next 12 months. All right, that's all I got for you this morning. It has been great talking to you.